Hello, good afternoon, and welcome to this webinar all about self-assessment. My name's Emily Coltman. I'm Chief Accountant to FreeAgent, and I'm here to just introduce you to some of the essentials all about self-assessment and filling in a tax return. What I would say is, because there's quite a big audience here today, unfortunately, I won't be able to take questions from the floor, so I'm sorry about that. If you use FreeAgent, you can ask our support team for help by clicking this little button in your account here. What I would say, though, is that our staff cannot give you tax advice. They can't take the place of an accountant. All they can give you guidance on is what FreeAgent can do from a self-assessment point of view, and what FreeAgent has calculated for you based on the figures in your accounts. So first and foremost, what self-assessment for what year are we looking at right now? Well, the one that's got to be filed by the end of this month, the 31st of January 2024, is the self-assessment tax return that covers this period here. That's called the tax year or fiscal year, running from the 6th of April 2022 to the 5th of April 2023. If you didn't start your business till after the 5th of April 2023, and there's no other reason why you should fill in a tax return. For instance, you don't have property income, you don't have income from a trust, you're not a minister of religion, etc. and so on. Go and grab yourself another cup of coffee because you've got another year to go. If your business did not start till after the 5th of April 2023, your first tax return is going to be due this time next year, not right now. So if you have got a business, if you own a business that was producing you some income between these dates, you're almost certainly going to have to do a tax return to file by the end of January. Any tax you've got to pay will also be due by the end of January. So you do the right thing coming along today if you're not sure where to start to fill in your tax return. As I say, it's going to include income from between those two dates. One thing to be aware of, excuse me, sole traders, when you're filling in the pages of your tax return that shows your business's income and costs, that's the self-employment supplementary pages that we're going to come to just shortly. If you draw up your accounts every year to a date that isn't either the 31st of March, 5th of April, or anything between those dates, the figures you're going to need to put on your self-employment pages are your business's income and costs for the accounting year that finished between those two dates. There's special rules if your business is in the early years of its trade. If you're at all unsure what figures to put on your tax return, you would need to speak to your accountant about that. But just to give an example, if you draw up your accounts to the 31st of December every year, and your business has been running for a few years, and you're a sole trader, the income and costs you're going to put on your self-employment pages are those for the calendar year 2022, because the 31st of December that fell between these dates is the 31st of December 2022, not the 31st of December that's just gone, the one to the end of 2022. What I'm going to do is to give you a brief overview of the anatomy of a tax return, what it looks like, and then I'm going to take you through some key questions that often crop up for people who are filling in their tax returns. So the basic layout of a tax return, what we're looking at here is what's called the main return. You might also hear it called the SA 100. If you have to fill in a tax return, you have to do these pages. These are kind of the core pages. They include basic income, basic tax reliefs that a lot of people will have. Tax relief, by the way, is a way of saving you tax, and there's loads and loads of different ones. You'll be seeing some of the more common ones today. And then once you've done the core return, you've got what we call supplementary pages for other kinds of income. So if you have a salaried job, you'll do employment pages. Company directors, taking salary from your company, that's you. You're almost certainly going to have some employment pages to fill in. Self-employment pages, you fill those in if you're a sole trader to tell the revenue about your business's income and costs. Company directors, you're not going to put the company's income and costs on this. This is your tax return. This is about your income. Sole traders, no legal separation between you and the business. So you tell HMRC on your tax return about the business's income and costs. Company directors, this is about you. The company is a legally separate entity, so you put the company's income and costs on the company's tax return, not yours. What we're going to look at today is just literally your tax return. Property pages, those are for if you rent out a property and you're earning some income and making some costs. Company directors, those pages are for properties that you own personally, not for properties that the company owns. Again, if the company owns the property, you report the income and costs on the company's tax return, not your own tax return. And then there are other different supplementary pages, some of which I mentioned earlier, things like if you've got income from a trust, if you're a minister of religion, if you've sold potentially some assets and you've made a capital gain, those would go on other supplementary pages. But FreeAgent doesn't support those, so I'm not going to be showing you those today. I'm going to be going into the common query points on the more common supplementary pages and the main return. So let's have a look at some of the more common query points on the main return. Which tax rates you're subject to? English and Northern Irish, Scottish or Welsh? That depends on where you lived, where you were living during that tax year. Where was your main residence? For instance, I'm English, born and raised in England, but I'm actually a Scottish taxpayer because I live in Scotland. It doesn't matter that I identify as being English. Because I live in Scotland, I'm a Scottish taxpayer. Some common income that you might receive. Interest from a UK bank or perhaps a foreign bank, dividend income. If you receive interest on a bank account that's in your name, you want to report the interest on the main return pages. That holds true even if the bank account is, for sole traders, a business account. Company directors, do not put on here the interest that the company earned on its bank account. That goes on the limited company's tax return. These are for bank accounts that are in your name. If the bank took tax off the interest before giving you the interest belongs in here, box 1. If the bank did not take tax off the interest before you got it, but it's still taxable, then that goes in there. Why did I say but it's still taxable? Because if you've got a bank account like an ISA or an old-fashioned PEP or TESA, those bank accounts pay interest that is tax-free. The bank doesn't take tax off and you don't have to pay tax on it. So what do you do with those? You don't put them on your tax return at all. If you've got a bank account that you own jointly with a partner, whether that's a business partner or a life partner, put your share of the interest onto your tax return. Your partner will do the same on theirs. Dividends. Company directors, if you are taking dividends from your company, you want to put those into this box of your tax return so that HMRC know about them. Anybody, you might just have dividends from perhaps an investment portfolio or something like that. Again, you would put those on the main return page. Let's move on a little bit. If you receive a pension, you have to tell HMRC about it in these boxes. This actually raises one particular question. Why do you have to report something like a state pension on your tax return when HMRC already know how much you're getting because it's a government department that pays you that pension? Because the purpose of a tax return is to report all of your income in the round, all of your income that relates to you. So even if the revenue already know about it, for instance, a pension or a salary from your job, because your employer is going to be reporting that information to HMRC as they pay you, even though the government's already got that information, you've still got to put it on your tax return. Now, here are a few tax reliefs that we need to touch on as we go past. If you are paying into a pension and it's coming off your wages, if it's your employer's pension scheme, you would only actually need to put those pension contributions on your tax return if the pension scheme is what's called a relief at source scheme and you're a higher rate taxpayer. That means you're paying tax at 40% or above. When I say a relief at source scheme, What I mean by that is that the pension is being taken off your salary after tax has been taken off. Do I mean that, or do I mean before? I always get that the wrong way round. But check to see whether it's a relief at source scheme. The pension provider will tell you that. Donations to charities. If you've made donations under gift aid, put those on your tax return, particularly if you're a higher rate taxpayer, because you'll be entitled to a bit of extra tax relief. Be careful though, because remember that if you're making donations under gift aid, you have to have said that you are a UK taxpayer and you have paid the tax that the charity is going to reclaim under the gift aid scheme. If you haven't paid enough tax to cover that, you will actually have to make it good. And you do that by putting the donation onto your tax return, and your tax bill will actually go up a bit to compensate. If you're repaying a student loan, put the details on your tax return, choose the correct plan. If your employer has already taken some deductions, put those on so that you are not asked to pay them twice. Marriage allowance is quite useful. If you are married or in a civil partnership and one or other of the spouses is a non-taxpayer, in other words, you earn income underneath the personal allowance threshold, which is £12,570 at the moment, and the other is a basic rate taxpayer, the non-taxpayer can actually transfer a little bit of their personal allowance to their spouse so that the spouse can save a bit of tax. That's quite useful to know about. So it's something to bear in mind, but it will only work where one spouse is a non-taxpayer and the other is a basic rate taxpayer. If you're both basic rate or either of you is higher rate, you're not eligible. I'm going to now go on to some of the supplementary pages. Employment, this, as I say, is for if you have a salaried job and you want to, you have to report that to HMRC on your tax return. Because as I say, even though HMRC already know you received that income because your employers told them, you need to include that on your tax return as well so that they can see all of your income. If you still had this job on the 5th of April 2023, you'll get a form from your employer called a Form P60, and you need to take the figures that are indicated on your P60 to put on your tax return. If you left your employment before the 5th of April 2023, you won't get a P60, you'll get a form called a P45. That's got pretty well the same information on it, so you would be able to fill those boxes in. Suppose you have more than one job. Perhaps you've got 2 part-time jobs or more than that. You would need to fill in a set of employment pages for each job. Don't make the mistake of adding them together. Do separate pages for each job. If your employer gives you a form called a P11D to indicate that you've had some taxable benefits like being provided with private medical insurance or something like that, you would put those figures onto your tax return. That is because if you've got a taxable benefit, you will have had more tax taken off your salary than perhaps the revenue would normally expect if you don't also mention the taxable benefit on your tax return. And they might try and give you some of it back, which, though that sounds fantastic, won't be so fantastic when the revenue realise their mistake and say, oh, I'm sorry, you'll have to give that all back. And by the way, we'll have a bit of interest off you as well. So don't forget to put your taxable benefits onto your tax return if you get a P11D. Self-employment pages, sole traders, these are for you. If you have a business, you need to fill in on your self-employment pages the details of your business's income and day-to-day running costs. That's so that you can work out any income tax and national insurance due on your profits. I say you can work it out. If you try and fill in the tax return on paper, then yes, you would have to do that. But the deadline's actually passed for filing a tax return on paper this year. That was the end of October. And also, why do that when you can use even HMRC's own website? If you fill your details in there, will calculate the tax for you. So I really would not go to the bother of filling in your tax return on paper if you can possibly avoid it. You'll see there that it mentions I'm drawing up my accounts to the 5th of April every year. This is what I said earlier about if you are drawing up your books to a different period other than the tax year, then you would have a different date there. You'd have your accounting year end. Just watch out for that if you don't draw up your accounts to the 31st of April or 31st of March or 5th of April every year. Company directors, you won't have to fill these supplementary pages in unless you also have a sole trade. I know I keep saying this, I make no apology because it's a mistake I've seen too many times. You don't put your company's income and costs on here. This is for sole traders only. What you'll see here is that FreeAgent has actually pre-populated these boxes. That's because this is a sole trader account in FreeAgent that I've put some data into. So you put in your sales and you put in your day-to-day running costs. Your business's day-to-day running costs are going to be those which HMRC say you're allowed to use in order to reduce the amount of profit. Now, there could be so many questions around this. This would be a whole webinar on its own, would be what costs can you claim tax relief on? There's some really useful material on our FreeAgent website that might help you with that. Look up the A to Z guide of expenses if you need more help with that. There are also costs that people commonly forget to include, things like mileage travelled on business in your own car. Keep a track of the mileage. You can include that at a rate of 45p a mile for the first 10,000 miles travelled on business in the tax year, 25p thereafter. FreeAgent is actually really helpful to help you work that out. You just would have to pop the mileage in and FreeAgent would work out the figure for you. Do not, though, make the mistake of including both mileage and actual costs for the car, things like petrol, servicing, MOT, insurance, and what have you. It's one or the other. You claim the mileage or you claim a business percentage of the actual costs. You cannot have both. That's double counting and it's not allowed. Another cost that people often leave out is an allowance for business use of home. Again, there's some really useful information on the FreeAgent website. If you look for business use of home for sole traders or for company directors, we've got guides for both. I haven't got a huge amount of time left, but I would just like to touch on the tax that is due on income for both company directors and sole traders. What we're looking at here is income that is going to be subject to income tax and possibly also national insurance. Not all income has to have national insurance paid on it. If you're a sole trader, you're going to pay what's called Class 2 national insurance, possibly, and also possibly what's called Class 4 national insurance on your business's profit. Company directors, you'll pay national insurance on your wages from the company. The company might also have to pay national insurance on behalf of you, but that's all handled when your wages are done. You don't even mention that on your tax return. If you're a sole trader, then what you would have is if your profits are under what we call the small profits threshold, you can opt to pay Class 2 national insurance, which is a flat weekly rate, in order to keep your entitlement to state pension and other state benefits. If your profits are between the small profit threshold and the next threshold up, which is £11,908, you don't have to pay Class 2 national insurance, but you're actually treated as if you had when it comes to eligibility for state pension and what have you. As to why the people who are making the lowest profits actually have to pay to qualify for that, don't ask me. I'm afraid I don't make the rules. I just teach them. If your profits are above that 11,000 figure, you have to pay Class 2 national insurance, no two ways about it. If you're over state pension age or you're under 16, then you don't have to pay Class 4 national insurance, which is a percentage of your profits once they go above that 11,908 threshold. You are exempt, as I say, if you are below or above a certain age. Otherwise, I'm afraid it's a case of you've got to pay it. If you look at the Your Tax Breakdown page, this you might also hear called an SA 302. What you'll see there is a calculation for how much tax you're going to pay. And you should see that no matter what software you're using, whether you're using FreeAgent or a third-party software or HMRC's own website. So I'm running a bit short of time because I do have to keep this to 20-25 minutes. So hopefully that's given you a good awareness of some of the more frequently asked questions on a tax return. I'd just like to highlight to you the property pages because that's a new addition to FreeAgent this year. We never used to support the supplementary pages for property income, property rentals. We do now. So if you have rental income, you will no longer be debarred from filling in and filing your tax return from FreeAgent to HMRC. So that's a little bit of good news. If you've got a landlord account type in FreeAgent, then it will pre-populate some of the boxes for you, just like we saw it doing for sole traders. Once you're ready to file your tax return, you can do that from FreeAgent. You can, as I say, do it from the Revenue website. You can do it from other third-party software. But what you will need in order to file is you'll need a government gateway, ID and password. If you haven't already got one of those, head on over to gov.uk and register as soon as you possibly can, because HMRC have to send you a code through the post to activate your account, and that can take up to 7 days to get here. And the filing deadline for this tax return, for the tax return that covers 22-23, the filing deadline for the 31st of January, which is, I think, just a fortnight tomorrow, not got huge amounts of time. And if you're late filing your tax return, you will get fined £100, even if you have paid all the tax that you have to, or you've got no tax due. You might be able to appeal the fine if you've got a reasonable excuse. For example, if you or a member of your family was seriously ill just before the deadline, but you will find yourself having to argue that. So if you possibly can, get your tax return in before the deadline. And don't forget that filing your tax return and paying any tax or national insurance you're due are two separate things, and you do need to do both. So make sure that you both file your tax return and pay your tax so that the money reaches HMRC by the deadline. Okay, I'm afraid that is all we've got time for today. I hope that's been useful and given you a good overview of some of the more common queries that crop up around self-assessment. As I say, if you'd like any help using FreeAgent, you can contact our support team. We do have a lot of useful information on our website when it comes to helping you fill in your tax return. We'll do our best to help you, but we can't take the place of your accountant. So if you're at all unsure whether, for instance, you can use a certain cost, if once you've read our guides, if you need more help around that, I would strongly recommend you speak to an accountant. Thank you very much for your time today, and I hope you have a good rest of the day. Thank you.